I'm Megan.
And I'm Ray.
Hey everyone, ready for another deep dive? This year was huge for tech stocks.
It really was.
The Nasdaq jumped 33%.
Wow.
Other U.S. indexes saw double-digit gains. But some tech stocks, well, they just went supernova.
Yeah, it was pretty wild out there.
We're going to be looking at the top 5 performers.
Okay.
Companies valued at $5 billion or more, at least, to try and figure out why.
The why is always the most interesting part, for sure.
And get this, AI, crypto,
Yep.
even the presidential election, all played a part.
It's all connected.
By the end of this, you'll not only know which companies won big, but you'll understand why.
And that's the key, right?
And maybe even spot some trends for your own portfolio.
Exactly. Got to get ahead of the curve.
So where do we even begin with all this?
Well, the connection between AI and crypto is fascinating.
Right.
Two technologies that seem totally different,
Right.
but they were both huge drivers for 2024's market winners.
So AI, it's gaining traction with businesses, right? But for everyday consumers, it's still, I don't know, it's kind of hard to grasp its impact.
I think that's fair to say.
But crypto, on the other hand.
Oh, crypto's been on a roller coaster.
Yeah, that's what it feels like.
Starting with the launch of those spot Bitcoin ETFs in January.
Wait, back up for a sec.
Sure.
Spot Bitcoin ETFs, for those of us that haven't been glued to the crypto charts,
Right.
remind me, what are those all about and why did they cause such a stir?
So basically, spot Bitcoin ETFs, they allow investors to buy shares that directly track the price of Bitcoin
Okay.
without actually owning any Bitcoin,
So it's like
buying stock in gold.
okay.
You're betting on its price movements, but you don't have to, store bars of gold in your basement.
Right. Makes sense.
So launching these ETFs in January, well, it made it much easier for regular investors to get in on the Bitcoin action. And that fueled a lot of the initial surge.
Part 1 of the crypto story.
Yeah, we'll get to the rest later.
Okay, good, because I'm definitely intrigued.
So back to those high-flying companies.
Yes, let's talk about them.
All right, remember AppLovin?
AppLovin, the mobile games.
Yeah. They started with those mobile gaming studios.
Woody Block Puzzle, Clockmaker, Bingo Story. Those were addictive.
Oh, tell me about it. Lost a few hours to those myself.
Oh, come on, really?
Maybe.
But seriously, that's not even the most interesting part, right?
Not even close.
They went public in 2021, right?
Right. Peak pandemic gaming.
But their stock price this year, an astronomical 758% increase.
That's mind-blowing, honestly.
The top performer.
By far.
758%? That's insane.
It is. But their success isn't just about those catchy mobile games anymore.
No.
No. What's really impressive is how they've leveraged their gaming audience to build a powerhouse in AI-powered online advertising.
Okay, now that's interesting.
It is.
So how did they do that?
They created this sophisticated ad search engine called AXON 2.0.
AXON 2.0, right?
Analyzes user data from their games and delivers super targeted ads. Way more effective and profitable than your typical banner ad.
So they're basically using what they learned from keeping us glued to those games to help other companies do the same.
That's the gist of it.
Clever.
And effective.
So how's that working out for them financially?
Well, their software platform revenue jumped 66% in the third quarter of 2024.
Wow.
Led to a 300% surge in net income.
300%.
Yeah, you heard that right.
That's incredible.
And their CEO, Adam Foray, he's even more excited about a new e-commerce project they're piloting.
Okay.
Which places targeted ads within games.
Wait, ads inside the games themselves?
You got it.
Sounds like a slippery slope to me.
It could be. We'll have to see how it plays out.
All right, well, let's shift gears a little bit, talk about MicroStrategy.
Okay.
They saw their stock climb 346% in 2023.
Impressive.
And then somehow managed a 467% increase in 2024.
Even more impressive.
What's their secret?
Bitcoin. That's their secret sauce.
Really?
Their founder, Michael Saylor, he basically went all in on Bitcoin.
So they were early adopters.
Oh, yeah. They started buying back in mid-2020.
Wow. So before it really hit the mainstream.
Way before.
Okay, but how did they manage to buy so much Bitcoin?
They used, a pretty audacious strategy.
Okay.
They leveraged the rising value of their stock to sell more shares, take on debt,
right,
and use that money to buy even more Bitcoin.
It's a high-risk, high-reward play.
Absolutely.
And so far, it's been paying off big time.
Big time.
They hold over 444,000 Bitcoins.
as of today.
Worth almost $44 billion.
Makes them the world's 4th largest holder.
Wow, that's a lot of trust in a digital currency that's, still pretty volatile.
No doubt about that.
But it seems like Saylor knows something we don't.
He might.
Especially considering what happened after the election.
Oh, yeah, things got even more interesting.
MicroStrategy's stock is up 57% since Trump won.
Correct.
While Bitcoin gained about 44%.
It's a curious connection.
It is, because Trump, he's criticized Bitcoin in the past. But his campaign received a ton of support from the crypto industry this time around.
It's true.
So is this a sign that he's warmed up to crypto?
Maybe. It's hard to say for sure.
And how does this all play into Saylor's grand vision?
Well, Saylor's predicting a surge in the entire digital assets industry under a Trump presidency.
A surge.
That's his prediction.
So he thinks a clear digital assets framework will be established.
He does.
Which could lead to even more mainstream adoption of cryptocurrencies.
That's the idea.
Time will tell.
As always.
It will.
It'll be interesting to watch, that's for sure.
Okay, so we've got AI-powered advertising. We've got a Bitcoin gamble paying off big time. What else is driving these massive gains?
Let's talk about Palantir.
Palantir.
Yeah, they've been making waves in data analytics.
Oh, yeah, Palantir.
Especially in the defense sector.
They provide those powerful data crunching tools for, intelligence agencies, right?
That's them.
Always seemed a bit shadowy to me.
They do have a bit of a mysterious aura.
Yeah.
But their stock performance this year has been anything but shadowy.
Really?
A whopping 380% surge.
Wow.
And a key turning point was their boosted revenue outlook just before the election. Their Q3 2024 performance was stellar.
Like how stellar?
They exceeded all expectations.
Wow.
Raised their revenue target for the year.
Okay.
And issued strong guidance for Q4.
So even Palantir, who's primarily known for working with governments, is riding the AI wave.
It seems so.
It feels like AI is touching every corner of the tech sector these days.
It really is pervasive.
And investors are taking notice.
Oh, absolutely.
Palantir stock jumped 23% right after that earnings report.
And then another 8.6% after Trump's victory.
Interesting.
Sensing a connection.
Yeah, there's definitely a political angle here.
There might be.
Didn't Palantir's co-founder, Peter Thiel, openly support Trump back in 2016?
He did.
And he even organized that meeting with tech leaders at Trump Tower after the election.
Yeah, right, he did.
And I think Palantir's CEO, Alex Karp, was there too.
Yes, he was.
But wait, didn't Karp actually back Kamala Harris this year?
He did, actually.
So a bit of a mixed bag politically within Palantir itself.
You could say that.
But regardless of their personal affiliations,
Right.
Wall Street seems pretty optimistic about their prospects under a Trump administration.
They do.
They're anticipating increased military spending.
Which could mean more business for Palantir.
Exactly.
We'll see how it all plays out.
Okay, so we've covered AI-powered ads,
Uh-huh.
a Bitcoin bet,
Yep.
data analytics for defense.
What's next?
What's next? Let's talk about Robinhood.
Robinhood, the app that brought us the meme stock frenzy a few years back.
That's the one.
They've had quite a year.
Have they ever?
Their stock more than tripled in value,
Seriously.
despite a little dip after a disappointing earnings report in late October.
So even after all that, they still managed to triple their stock value.
More than tripled.
I'm guessing crypto has something to do with this.
Oh, definitely.
Because they quickly rebounded,
They did.
surging 20% following Trump's win.
Riding that wave of crypto enthusiasm.
Okay, it makes sense.
Right.
Robinhood's whole brand is about, democratizing investing.
Yeah.
So it's natural for them to embrace crypto.
Absolutely.
But are people actually using Robinhood for crypto trading?
Oh, big time.
Really?
In Q3 2024, their crypto transaction revenue soared by 165%,
Wow.
reaching $61 million.
That's a lot.
It's about 10% of their total revenue.
And they're not limiting themselves to just Bitcoin, are they?
Nope. They offer a wide range of cryptocurrencies.
Like what?
You've got your Ethereum, your Dogecoin,
Okay.
even some more obscure ones like Shiba Inu and Bonk.
Bonk. Haven't heard that name in a while.
It's making a comeback.
So Robinhood's basically a one-stop shop for all things crypto now.
Pretty much.
But what's their long-term vision?
Their CEO, Vlad Tenev, he sees crypto as a truly disruptive technology.
In what way?
He thinks it'll revolutionize payments, loans, all sorts of assets.
Huh. That's a bold statement.
It is.
But do analysts share his optimism?
They seem to.
Yeah.
They're projecting over 70% revenue growth for Robinhood in Q4 2024.
70%.
That would be their fastest growth rate since their IPO back in 2021.
Wow. Okay.
And when you compare them to Coinbase, who saw a 61% gain this year, Robinhood's clearly outperforming them.
Interesting.
Now, Coinbase is still twice as valuable,
Okay.
with a market cap of $70 billion.
Right.
But Robinhood seems to be catching up fast.
So we've got 4 companies down.
4 down.
Some pretty mind-blowing gains.
For sure.
But I have a feeling our final company is going to take the cake.
You might be right about that.
Remember Nvidia?
How could we forget Nvidia?
They had an amazing 239% gain in 2023.
That was just the beginning.
And get this, they climbed another 183% this year.
It's hard to wrap your head around.
Another 183% on top of that.
Yeah, they're defying gravity.
What are they doing that's sending their stock into the stratosphere?
They're the driving force behind the AI boom. Cloud providers and tech giants are practically fighting over their GPUs.
GPUs, remind me again why those are so important for AI.
So GPUs, think of them as the brains of AI systems.
Okay.
They can process massive amounts of data at the same time, which is what you need for training complex AI models.
Got it.
And NVIDIA's GPUs, they're the gold standard.
So they're basically selling the shovels in the AI gold rush.
You could say that.
And their revenue numbers must be reflecting that.
Oh, absolutely. They've seen at least 94% growth in each of the past 6 quarters.
Each quarter.
Each quarter.
That's incredible.
And they've even surpassed 200% growth 3 times in that period.
Wow, that's a level of growth we rarely see.
It's truly remarkable.
And it doesn't sound like they're slowing down.
Not at all.
I hear they have a new AI chip on the market.
Yeah, their next generation AI chip, Blackwell.
Blackwell.
It's in full production right now.
Okay.
Their CEO, Jensen Huang, he's predicting several billion dollars in Q4 revenue from it alone.
Just from that one chip.
It's a game changer.
Wow, so they're really on a roll.
They are.
But amidst all this excitement,
Yeah.
is anyone sounding a note of caution?
Oh?
This level of growth, it can't be sustained forever, right?
You're right. Analysts are predicting continued growth, but they do expect things to slow down a bit in the coming quarters.
Makes sense.
And there's always a risk that comes with relying heavily on a few giant tech companies for your revenue.
Oh yeah, that's true.
If those companies stumble, Nvidia could feel the impact.
So even a company as dominant as Nvidia isn't immune to market forces?
Nobody is immune to market forces.
What are they doing to mitigate this risk?
Well, they're aware of the risk.
Okay.
And they're trying to broaden their customer base.
How so?
By targeting smaller companies and exploring new applications for their technology beyond just AI.
So not putting all their eggs in the AI basket.
Exactly. They're diversifying.
Smart.
They're also investing heavily in research and development.
Just stay ahead of the curve.
To stay ahead of the curve.
So it's a balancing act.
It is.
Capitalizing on the current AI boom while also preparing for a future where the landscape might look very different.
That's the challenge and the opportunity.
And we'll dive deeper into those challenges and opportunities right after this.
Stay tuned.
So we just dove deep into 5 companies that absolutely crushed it in 2024.
Crush it.
It is an understatement.
AppLovin, MicroStrategy, Palantir, Robinhood, and Nvidia.
Quite a lineup.
Each riding those waves of AI, crypto, and even politics.
To varying degrees.
But what are the takeaways here?
That's the key question.
What can our listener learn from these stories?
Well, beyond just which stocks went up.
Right, exactly.
I think what these companies demonstrate so well is the power of adaptability and innovation.
Okay, like give me an example.
Look at AppLovin.
Yeah.
They weren't content just riding the mobile gaming wave.
Right.
They saw the opportunity to build a whole new business around AI-powered advertising.
And they did it by leveraging what they already had, right?
Exactly.
A massive user base.
Deep understanding of user behavior within games.
It wasn't just a random pivot.
No.
It was a smart evolution.
They were able to connect the dots and capitalize on a trend that was just emerging.
That's the key.
Now, on the other end of the spectrum, you've got MicroStrategy.
Ah, yes, MicroStrategy.
Which took a much bolder approach.
Some might say riskier.
Yeah, that's the one that keeps me up at night.
I can see why.
Putting all your chips on a single volatile asset like Bitcoin, that takes guts.
And maybe a little bit of crazy.
Yeah, a little bit of crazy.
But you have to admire their conviction.
I do.
It's a reminder that sometimes unconventional strategies can lead to outsized returns.
But that level of risk,
Right.
not for everyone.
Definitely not.
It highlights the importance of, I guess, understanding your own risk tolerance and investment goals.
Before jumping into any hot new trend.
Okay, so we've got adaptability on one end,
Uh-huh.
calculated risk-taking on the other.
What else?
What else should our listener be paying attention to?
I think one of the biggest lessons from 2024 is the importance of staying informed and being willing to learn and adapt.
Because
The tech landscape is constantly shifting,
oh yeah.
and the companies that thrive are the ones that can anticipate and respond to those changes effectively.
It's like we said before.
Mhm.
It's about understanding the why behind the trends, not just chasing the hype.
Oh, sure.
And that requires going beyond the headlines, right?
It does.
Really digging into the underlying technology.
Whether it's AI, crypto, or something else entirely.
You need to separate genuine innovation from speculation.
That's the hard part.
It is, especially these days. We're bombarded with information.
Information overload.
It's hard to know what to trust,
So how can our listener become a more discerning consumer of information?
especially in the fast-paced tech world.
It's about developing those critical thinking skills,
Okay.
being able to evaluate sources, assess biases, look at things from multiple perspectives.
Don't just accept information at face value.
Yeah. Exactly. Challenge assumptions, ask questions, be willing to change your mind when presented with new evidence.
It's almost like becoming a tech detective.
I like that analogy.
You have to sift through the clues, follow the leads, and piece together the bigger picture.
And these deep dives are a great way to start that process.
That's what we're here for.
We're highlighting the connections, the trends, the things that might not be immediately obvious.
Like how political shifts can impact the tech sector, how AI is transforming industries from advertising to defense.
And how crypto is pushing the boundaries of finance.
It's a reminder that we live in a deeply interconnected world.
What happens in one area can have ripple effects across the entire tech ecosystem
And beyond.
and beyond.
So we've got adaptability,
Exactly.
calculated risks, continuous learning, critical thinking.
Yeah.
Any other pearls of wisdom from our 2024 tech review
I think it's important to remember that these 5 companies are just a snapshot.
of a much larger picture?
Exactly. A much larger, constantly evolving landscape.
There are countless other stories out there.
Countless innovations happening right now.
That's what makes it so exciting.
It does.
It feels like we're just at the beginning of something huge.
We are.
And the possibilities are endless.
The possibilities are definitely endless.
We're living in a truly remarkable time,
We are.
witnessing the birth of technologies that have the potential to reshape every aspect of human experience.
It's mind-blowing when you think about it.
But with all this potential comes a lot of responsibility.
Oh, absolutely.
We can't just sit back and let technology shape our future for us.
We have to be active participants.
Making conscious choices about how we develop, deploy, and regulate these powerful tools.
It's up to us.
So it's not just about understanding the what of technology, but also the how and the why.
You got it.
It's about ethics, sustainability, ensuring that these advancements benefit all of humanity.
Not just a select few. That's the goal.
Okay, so we've talked about adaptability, calculated risks, the role of politics, the importance of education, and the need for critical thinking. What other key insights can we draw from the successes and potential pitfalls of these top-performing tech companies?
One thing that stands out to me is the importance of focusing on the long game. While it's tempting to get caught up in the short-term fluctuations of the market, true success in the tech sector often comes from a commitment to building sustainable businesses that can weather the inevitable storms.
That's a great point. We've seen how quickly things can change in tech companies rise and fall, new trends emerge, and disruptions happen overnight. So how can investors and companies alike navigate this volatile landscape and position themselves for long-term success?
Well, one key is to focus on solving real problems with innovative solutions. Companies that are simply chasing hype or trying to make a quick buck are less likely to survive in the long run.
It's about creating value, not just generating buzz. And that requires a deep understanding of customer needs, a commitment to continuous improvement, and a willingness to adapt to changing circumstances.
Precisely. And for investors, it's about looking beyond the flashy headlines and identifying companies that have a clear vision, a strong leadership team, and a proven track record of execution.
So it's not just about picking the hottest stocks at the moment. It's about investing in companies that are building for the future. And speaking of the future, let's zoom out a bit and talk about the broader implications of these technological advancements that we've been discussing. AI, crypto, data analytics, these are powerful forces that are already reshaping our world in profound ways.
Absolutely. And while there's a lot of excitement and optimism about the potential of these technologies, we also have to acknowledge the potential risks and challenges that come with them.
We touched on some of these earlier, like the ethical implications of AI and the need for responsible regulation in the crypto space. But what other concerns are on your radar?
One that's top of mind for many people is the potential impact on jobs and the workforce. As AI and automation become more sophisticated, there's a real concern that many jobs could be displaced, leading to economic inequality and social unrest.
That's a scary thought. It feels like we're on the cusp of a massive societal shift, and it's hard to predict how it will all play out. What can we do to prepare for this future and ensure that everyone benefits from these technological advancements?
That's the million-dollar question, and one that policymakers, business leaders, and individuals alike are grappling with. Some argue for a universal basic income to provide a safety net for those displaced by automation. Others emphasize the need for education and retraining programs to help workers adapt to the changing job market.
It seems like we need a multi-pronged approach addressing both the economic and social implications of these technological disruptions. And it's not just about governments and corporations figuring it out. Individuals also need to take ownership of their own future and develop the skills and adaptability to thrive in this rapidly evolving world.
I couldn't agree more. Lifelong learning, critical thinking, and a willingness to embrace change will be essential for navigating the years ahead.
So it's not just about understanding the what of technology, but also the how and the why. It's about ethics, sustainability, and ensuring that these advancements benefit all of humanity, not just a select few.
Precisely. And that brings us back to one of our earlier points, the importance of staying informed, asking questions, and engaging in thoughtful conversations about the future we want to create.
This deep dive has been a fantastic exploration of the forces shaping the tech landscape from the micro level of individual companies to the macro level of societal change. And speaking of companies, let's circle back to Nvidia. They've been a dominant force in the AI boom, but their success story also reveals potential vulnerabilities that investors need to be aware of.
You're absolutely right. Nvidia's meteoric rise has been fueled by the insatiable demand for their GPUs, which are essential for AI development. But their heavy reliance on a handful of tech giants like Google, Microsoft, and Amazon for the bulk of their revenue creates a potential point of weakness.
So if any of those tech giants were to stumble, or if there was a significant slowdown in AI development, Nvidia could feel the impact pretty sharply.
Exactly. It's like building a house on a foundation of just a few pillars. If one of those pillars weakens, the whole structure could be at risk.
That's a great analogy. It highlights the importance of diversification, not just for investors, but for companies themselves. Nvidia is aware of this vulnerability, and they're taking steps to broaden their customer base by targeting smaller companies and exploring new applications for their technology beyond AI.
They're also investing heavily in research and development to stay ahead of the curve and maintain their technological edge.
So it's a balancing act. They need to capitalize on the current AI boom while also preparing for a future where the landscape might look very different.
And that's a challenge that many companies in the tech sector are facing right now. It's a time of incredible opportunity, but also one of significant uncertainty.
Well, this deep dive has certainly given me a lot to think about. We've covered so much ground, from the specific strategies of individual companies to the broader trends shaping the tech world, and even the ethical and societal implications of these powerful technologies.
It's been a fascinating journey, and I hope it's inspired our listeners to continue exploring these ideas and to engage in thoughtful conversations about the future of tech and the role we all play in shaping it.
Absolutely. So to wrap things up, I think the key takeaway here is that the tech world is constantly evolving, and those who are willing to adapt, learn, and think critically are the ones who will thrive. Whether you're an investor, an entrepreneur, or simply someone who's curious about the forces shaping our world, stay curious, stay engaged, and never stop asking questions.
Beautifully said. And on that note, I think it's time for us to sign off. Until next time, keep exploring.
Thanks for joining us on this deep dive. We'll catch you on the next one.